Hello, fellow traders. 'Tis I, the Rumpled One. Thursday, November the 9th, the year 2018. Let's talk trading. Trading shortcuts. Well, if you came here looking for a shortcut, guess what? There are none. That's right. No shortcuts in trading. Many times people will go to a thread on a trading forum, and the thread might consist of 100 or 1,000 or more pages. And they come in and they start asking questions that, had they taken the time to maybe read the first 10 pages, or even just the first post, their questions would have been answered, but they're lazy. And last night I was watching a video by Robert Greene, who authored, the 48 Laws of Power, and he's one of his next to his last book was Mastery. And in the video, he was saying that if you ask if there's a shortcut to mastery, well, obviously you don't want to be a master, and you just might not be cut out to be a master, because he says become a master, it takes patience, it takes time. You've got to invest the time, and do the work. And it's really funny because as I was thinking about this video, usually one of the first things I do in the morning is I skim through email, and after watching that video this morning, there was like three of the emails all had to do with doing something to become a master, and they all talked about the little things, how success or failure is built one little thing at a time. You usually don't fail immediately, and you don't succeed immediately. It's usually over a period of time where you've made decisions and taken actions, or failed to take actions that lead to the result. And then another one talked about composing, which I was thinking I could do a whole video on that or use that as a topic, but I think it ties in that when we do a trade, if you think of it as a composition, it's a very interesting perspective. So, for example, how do you compose a trade? Well, first, a good place to start is with your money and risk management. You decide how much you're willing to lose on this particular trade. So that's part of the composition. And then if you think of the trade not just in just the entry and the exit as pieces, but in the overall picture, or when you look at your chart, the overall picture, and how your trade fits in with the overall picture that you see. Because one of my favorite sayings is that you have to trade what you see, and if you can't see it, you simply cannot trade it. So little things. So for example here, what are the little things? Well, you can see this is a very sparse chart. I've got the previous midpoint, previous candle's midpoint dot. So that's one thing I have. And the other thing is I just have, the 5 lines for the previous candle. In this case, the high, the open, the mid, the close, and the low. So how do I compose this trade? Well, if you look at the chart, you see it kind of went this way, and then it kind of went this way, and now it's kind of drifting, right? Up and down, up and down, up and down. So kind of like, well, let's see. You see, it was a wick zone trade. So we're composing this trade based on a wick zone. And right there, you see where the entry is. And it went all the way up through the midpoint. Now, I pointed out to you, midpoint, there's a lot of action there. So you see we're 22 pips below that midpoint. Now 21, now 22. It's oscillating. But the point is that when it hit that midpoint going up, there was an opportunity to take profit, to bank some of the profit. Now, if you just put on, as I suggested, maybe you just put on 0.01 pip, a micro lot, and so maybe you just take the profit on the way up. Or you see it going up, maybe, and you see here it's 82 pips. Well, it starts to come down 80, 50 pips, and you were up maybe 200. You just gave back 25% of the trade. You might say, maybe I'll just pop out of that trade and take the profit. So, in the overall composition of the trade, you see where you are on the chart, what price is doing, where you want to enter, what a possible target is, and then you compose and you put in the exit. So that's what I mean. So if you think about it again, what am I saying? There's no shortcuts here. And we're going to compose the trade using all the pieces that you've learned about trading: entries, exits, money management, waiting for your entry trigger, your entry signal. So here we go on the week. Now look at this. We had exited the upper wick zone of the previous week's candle. You see, we're 84, 83 pips off of there. We just came all the way back down to the previous week's high. So it was about up 84, down 84, right there. So once again, had you taken this trade, there's many opportunities to exit. Now on the weekly, you can see here, this was the wick zone from a while ago. You can see here, failed to get out of that wick zone. So I like to look at recent wicks, not necessarily just the previous, but you just see where it is, because obviously the sellers pushed price down there. And so you see it didn't break. Sellers started to push. Just take the pips off the table. And since we're on the weekly chart, we still have those 4 that never filled the gap. It's Thursday. You never know. They could turn around and fill it between today and the close of market business on Friday. So we don't know. But for the most part, it looks like those gaps won't be filled. Now we get down to the daily. And once again, you see we had a wick zone trade, this time out of the lower wick zone of the previous day's candle. Now you might be thinking, I've been mentioning wick zones a lot. Well, what I realized is that most trades that I do are based on those 5 lines. I mean, just about every single trade is going to be based on either high, open, close, mid, or low of the previous candle. Doesn't matter even what time frame I'm on, even down to the 1 minute. You can use that to time your entries and exits, because it's one of those things where I guess you could say it's fractal in nature, but if it only works on one time frame and doesn't work on the other, well, then that system to me isn't a very good system. But if you can transport it from, and time frame doesn't matter, because time frame is just a concept anyway. It's illusion. It's just how much you compress the data, which is ticks, which is why I have a tick chart that I can also use trading to pinpoint entries, which I think I discussed at length earlier this week. And you can see here we've got daily. Okay, we had a trigger. You had a second trigger. That looks like that should have been a scratch. Otherwise, it turned into a loss. Here you had a trigger. That was a winner right here. Not really a trigger unless you're a pro trader. But you see here, because see, this was fading to the pivot, so we've got a missed pivot on the day. But it was a nice short had you taken that short. But this would have been a pro trade only short. Now, if you took this trade and you walked away and said, okay, it's either going to stop out here or here, then you can see you enjoyed a very nice profit. And the rat zone, green rats. See, at this particular time, there was no rat zone. We've got a 71 pip range, so nice range for trading the rat zone. You can see here we put in the bottom. Price tried to get out. You're just riding it because your stop should be somewhere around 128.90. Okay. And so now you can see here, there's little profit to be made, touch the zone and back out. Once again, missed pivot. Missed pivot. Now people might wonder, why you have to pivot on 3 different charts? Why not just use one chart and be done with it? Well, it doesn't show everything I want. Each chart has a different view, and so this is pivot trading only. Okay, the other one was the buy zone, and this is basically missed pivot statistics. So that answers that question. Why do I have pivots on 3 charts when they think one chart will do? Each chart has its own. Plus, if you notice, this was daily, this was H4, and the rat zone is M15. Now, once again, price is the same on all time frames. The only difference is when you're doing the open, high, low, you can do it for the previous candle of the time frame, or you could put the daily or the weekly or the monthly or the H4, whichever ones you want. Then moving here, we don't have pivots anymore. We simply just have the 3 level ZZ and just horizontal lines spaced 10 pips apart. We can look here for buying and selling on the ticks. We just used the 3 level ZZ, 3 at the bottom, green at the line long. And right there's an opportunity to take 10 pips. You can see here if you placed your stop loss 1 pip below the 3 ball, it was never really threatened, but you were probably like, wait a minute, I had 10, 11 pips. Now I'm down a pip. And then price turned around and you see you had 10, 20, up to 30 pips. You should be out because of the 1 ball, even though this 1 ball indicates a breakout. So maybe in the next 19 minutes, we've got 18 minutes we got left in the bar. Price could pull up higher, but the thing is, you can see there's been selling, and this is telling you get out of the trade. Oh, and by the way, those of you who donated for the 2018s, I did send out the update to that indicator, the spread dots. So if you got that email, go ahead, download that indicator and recompile it, and then you'll have the proper numbers on the weight. Once again, the 5 lines from the previous day, trading with candle color at the line. Or we can trade as a wick zone. Price gets in the wick zone, doesn't like to stay in it. And as you can see here, it left it twice from the downside and twice on the upside. Whole lows set up. The last low was here, lowest open, and it's moved up nicely. Inventory reduction bars. We got a short trigger here, long trigger here. That long trigger was just basically a scratch trade. And remember, inventory reduction bars, I just use this particular system, the Ron Hoffman system, or Rob Hoffman, just to grab a handful of pips. Now, there's one trader really likes it on the daily and it's been making nice profit returns using it on the daily. And here, once again, previous days, open, high, low, and trading with candle color at the line. Tick chart shows here selling. You can see that. And right here, Einstein line had a long. Now there was a short. Larry live trade. There you go. So, fellow traders, no shortcuts to trading. You got to put in the work. You got to put in the time. You have to compose your trade. Don't think of the parts, but you compose it as a whole. Because once again, it's not what you trade, it's how you trade it. So go out there and drain the banks.